Hi guys, this is Shaib Mama and welcome to Crypto Mama channel. In today's video, we are going to look at a review of what happened this week, and we'll be using that particular analysis to determine our bias for next week. So before the week began, that was on Sunday, I posted this particular chart on Facebook and as well as Twitter, explain what we should be expecting next week, the week to look like. And that was when the market was here. That was on Monday. I posted this. So I was expecting the market to gravitate towards or to trade to the downside before to this particular area here, at least, and take out this liquidity down here before making a move to the upside. But during the course of the week, though we actually traded in the direction, but the trend was so weak, we are not able to take out the regions yet. So this was when I posted the chart. This area here was when I posted the chart, and after that we had this 1, 2, 3, 4, 5 days of trading. And at the current moment, we are not being able to take out this liquidity here. We have not also been able to trade to our neckline here. And these two areas here, they are our key levels. Until this area here is taken out or the market trade to this area, we are not looking for the market to trade to this area or take out this particular high here. And you can see that through the weekly trading to what happened this week, the market created this pattern here, this M pattern here. And I told you after the creation of an M pattern, you can expect the market to trace back to a neckline before making a further move to the direction that the trend already established. But at the current moment, we cannot be anticipating that the market will trade to a neckline yet because there is still unfinished business down here for the market to take out all the stop losses that caused a move to the upside here. And when you even look at here, you see this area here around the neckline, there's a fair value gap around the neckline. Currently, the market might try to trade to the fair value gap before making a further move to the downside, or the market might just go straight to the downside, take out the stop losses here, trade to the neckline, then start climbing to the upside. But one thing you should notice that if the market should trade to this area first, we'll be shorting the market to the downside once again. But if the market should trade below this area here and touch the neckline, or even if it doesn't touch the neckline exactly, but trade below this area here and take out these liquidities here, on the market coming to the upside, we will not be interested in shorting the market to the downside once again, because at that particular moment, the narrative has changed. Liquidity has been taken, and we will not be interested in shorting the market to the downside. So, in case the market should trade below here before coming here, we will not be interested in the short. But from this particular moment, if the market should trade up to the upside, we'll be interested in shorting the market from here to this area here. And the way we'll do it is that we'll go to our lower time frames. That is our 4 hour and below time frames. Let's check the hourly time frame. We'll go to our hourly time frame. Then we'll be looking for a change in market structure. This was the last low that created a high. So on the break of this low, if this high should get broken, the market should trade through this high. If something like this should happen, the market should trade through this high. On a retracement, we'll be taking a trade to the neckline region. And after the market gets to the neckline region, we'll also be interested in looking for another market structure shift. The market will be creating structure here as the market will be coming to the upside. As the market will come to the upside, to be creating another structure. So upon the market getting here, we're looking for another market structure shift, and on a retracement, we'll be taking the trade back to the area below where we expect the market to take liquidity from. But at the current moment, our bias is still bearish until the next week's open. The only area that invalidate our bias for the mean term or for the short term is if this low is sorry, if this high is broken. If we should have a change of character here, if you have a change of character here, that means that we expect this high to be taken out, this high to be taken out, and this high to be taken out, as well as this high to be taken out. And after the market has traded to the neckline, that's when we stay cautious. And you can see that at the neckline, there's even another fair value gap around here. There's another fair value gap around here. So upon the market trading to the neckline, this is when we will do what? Start looking for another shorting opportunities. But if from here the market should just keep on, if from here the market should just keep on melting to the downside, melting to the downside, melting to the downside, and the market trade to our neckline or even take our liquidity and switch bullish once again, we will not be interested in shorting the market if the market trade back to the neckline, because upon that area the narrative has already changed. Market has taken liquidity, the narrative has changed, and we will not be interested in what? Shorting again. So the only way we are interested in shorting from this area is when the price trade to that area before taking liquidity. If price takes liquidity before trading to that area, we are not shorting it. So from next week, we are still expecting lower prices, and from here you can see structure is still bearish. So if the market should continue trading to a downside, if you get a setup to go bearish, we'll do it. If you are not getting a setup, we'll wait. If the market should break structure and change character here, then we'll be looking to go long to the neckline here. So this is basically what we are expecting from next week. We still expect lower prices from next week, but this particular area currently would invalidate our short-term bearish movement if we should break above it, possibly on Monday trading, if we should do something like that and break above it on Monday. But if we don't, then we'll still keep going down. We'll be looking for lower prices. So thank you for watching this video, and I'll see you again in another video.